We continue with our markets coverage now. Of course, to unpack the markets for us, I'm joined by Gary Booysen. He's a portfolio manager at Rand Swiss. A very good afternoon to you, Gary. Thank you very much for your patience. So what's your take on what's happening with the oil price in light of the growing hostilities in the Middle East? It doesn't seem to have ratcheted up, but it has gone up. And do you think that the global economy needs to be concerned at this stage?
I think the global economy is concerned at this stage, specifically regarding global economic growth. So it's one of the reasons that we haven't seen the oil price shoot up, given the tension that we're seeing across the Middle East. At the moment, we've seen Israel escalating attacks against Hezbollah, Hamas, and even the Houthis. But really, the question is, will Iran be drawn into the conflict? We know how important the Straits of Hormuz are just in the global supply of energy. So looking at it, the oil price has been a little subdued. We've actually seen, larger inventory drawdowns that should have supported the oil price. We've also seen the Chinese stimulus last week. Any talks around stimulus out of China should also help to increase oil prices, but they do remain very low. Brent crude oil currently trading around $71 a barrel, so a long way from that $100 a barrel level that we had, fairly recently. One of the reasons is that we aren't seeing the oil price lift. Yes, it is concerns around global growth, but it's also reports that we're getting out of OPEC. So there's a report that's showing that Saudi Arabia might be scrapping its policy of trying to achieve $100 a barrel, and the supply cuts that we've seen might be rolled back. And if that is the case, and we see OPEC starting to bring a lot more production on stream, it will suppress the oil price as well. So a lot of moving parts to the oil price story at the moment, but it looks evenly balanced at around $71 a barrel.
So tomorrow's a new month, October, and this week's going to be a data-heavy week. What will be some of the major drivers for the markets this week in terms of data?
Yeah, so a very, very heavy data week this week. So we've got all sorts of things that are going to come out. I think the most important one is always going to be the U.S. labor market figures. So on Friday, we will get the non-farm payroll figures. We're expecting around 140,000 jobs to be added in the U.S. The unemployment rate is expected to stay steady at around 4.2%. All of this will feed into expectations of whether or not we're going to get a 50 basis point rate cut from the Fed at their next meeting in November, or the 25 basis point cut. Currently, the federal funds futures are pricing around a 60% chance that it will be the 25 basis point cut. On top of that, we've got a whole raft of PMI numbers coming across from Europe and from the US. So on Tuesday, we'll see some ISM manufacturing PMI data. We'll see some services PMI on Thursday as well. Manufacturing in the US expected being contractionary territory, services and expansionary territory. Of course, ahead of that non-farm payrolls numbers, we're also looking at the JOLTS job openings numbers. So again, some key labor market data. This evening, we've got Jerome Powell speaking, so really a lot that can move the needle this week, and we'll be I suppose, digesting each of these data points and economic events as they happen. Yeah,
indeed. So the Rand continues to surprise on the firmer side, although today it's kind of wibble wobble, but still sort of trading between that 17.14, 17.18 against the US dollar, and not doing too badly against the major currencies, the other major currencies, the euro and the British pound. What's your analysis of where the Rand is at and how much further it can go?
No, so it's a great question. I think you need to look at what has been moving the Rand. So as you say, the US dollar, we seem to be building a base at around 17 Rand to the US dollar. As you say, kicking off today, we're back to around 17.18 presently. So, why is this happening? So part of it is obviously the interest rate differential, and also the timing of the meetings between the South African Reserve Bank and the Fed mean that interest rate differential is expected to actually increase. Of course, the Fed took 50 basis points off their headline rate, but South Africa only took 25 basis points off there. So relatively speaking, the South African Rand becomes more attractive. Another reason that we're seeing the strengthening is that there's a high correlation between commodity markets and commodity prices in the South African currency. So with the commodities strengthening largely in response to the announced Chinese stimulus measures, that's also helping to form a little bit of a tailwind. And we can't ignore the optimism around the South Africa itself, as we continue to see it performing well, even against a basket of of emerging market currencies. So certainly the GNU definitely helping to increase expectations of economic output, and the idea that we haven't had load shedding for a significant period now also helping to expand on that optimistic story. So again, a lot of good things happening for the local currency. How far can it strengthen? I've seen estimates of the currency out to around 1650 all the way out to the fourth quarter of 2025. But as we know, the rand is a very volatile currency and very susceptible to shocks, very susceptible to international portfolio flow. So if anyone gets nervous and foreigners start pulling money out of our country, you will naturally see that the currency start to depreciate. So always very difficult to make a call on something like the rand dollar, but at the moment we'll take the strength when it comes.
Indeed, indeed. Gary, we're going to leave it there, but thank you always for your time and insights. Gary Booysen, he is from Rand Swiss.